This video provides an overview of Treasury in Sage X3 construction. The Treasury feature set allows a CFO to maintain a view of the company's liabilities, assets, reserves, and to model the impact of potential projects on the cash flow of the company. Let's begin with cash flow models. Cash flow models are a group of projects and their projected revenue and expenses used for planning purposes. Let's look at Project 1. Here we see a projected cash flow that is under consideration. This shows monthly entries for expenses and revenues. We can set modifiers on these items, such as adjusted amount and adjusted dates, allowing us to discount or overstate expected income or expenses in the future. Project cash flows allow for time shifting of cash flows to reflect projected changes in schedule and risk. For example, we may have the available manpower to accelerate the construction schedule, but we need to see if our available cash flow will cover the accelerated expenses. A markup table allows the user to adjust the time or amount of expense or revenue within the chosen period. Time shifting allows for adjustments based on future, unknown events or risks, such as adjusting revenue for possible delays in payment or progress. Adjusting the amount of expenses can be used to represent overages or risk of overages as needed. Time shifting also allows for markup or markdown of the cash flow items to accommodate for uncertainty in the future. Expense time is an amount of time in days, which will shift the date on which the expense will take effect. Positive numbers push the expense date farther into the future. Negative numbers bring it closer. In this example, the expense time for April is 10 days earlier than anticipated. Expense amount is a percentage which will adjust the amount of the expense. Positive numbers increase the expense amount, negative numbers decrease the expense amount. Here, we see a 5% increase in expense for April. Revenue time is an amount of time in days, which will shift the date on which the revenue will take effect. Positive numbers push the revenue date farther into the future. Negative numbers bring it closer. For April, the revenue time is 10 days later than expected. Revenue amount is a percentage which will adjust the amount of the revenue. Positive numbers increase the revenue amount. Negative numbers decrease the revenue amount. In this example, the revenue amount was reduced by 5%. Markup adjustments can be reflected in cash flow items by clicking Calculate. Cash flow items in April, May, and June now reflect the adjusted amounts and the adjusted dates from the markup table. Project cash flow projection is a way to track cash flow items for projects and model adjustments to the time and expected amount of future cash flows. Users may create, view, delete, and update models, projects, cash flow items, and/or markup table entries. Now, let's look at cash flow model graphs. Users can display a single model graph to visualize current and future cash flow items for projects and model adjustments. The cumulative flow line shows the cumulative cash flow of the model beginning at 0. When each expense or revenue is scheduled to take effect, it is added to the cumulative flow. We can also graph up to 3 models for comparison purposes. Multiple models allow users to look at the same project, but in different scenarios, or to compare the worth of taking on multiple projects at the same time. In this example, we see the best case, worst case, and base case scenarios for a given project. A feasibility analysis allows users to assess a project's viability within the current market. There are 2 types of feasibility analysis: front door and back door. Front door feasibility is used to justify a projected land acquisition and construction cost. X3 Construction calculates the minimum rent per square foot needed to make this project feasible based on the user's entered values. In this example, we have a 30,000 square foot building that is 95% occupied with these expenses. Thus, we need to charge $9.31 to cover our costs. We can then compare the local market values of rent per square footage to see if this project would be profitable. Backdoor feasibility determines how much could be spent on land acquisition and construction for the project to still be feasible. X3 Construction calculates the mortgage and cost of a site supportable by the user's entered values. In this example, we have a 29,750 square foot building for which we are charging $12 per square foot. Assuming a 92% occupancy rate and these expenses, we can afford to spend approximately $591,000 on the site. The financial asset management system of X3 Construction records details of specific financial assets as well as company policy concerning the minimum and maximum amounts for different asset types. Users should begin by adding financial asset tracking information to a bank. This screen allows users to add metadata to a bank account in X3. Once the financial asset data is complete, we can move to setting up the financial asset policy. Financial asset policies provide a framework for managing assets across all companies for adherence to internal policies. This can help manage the prescribed balance of asset types. The same financial asset policy can be applied to multiple companies. Let's look more closely at the category lines. The maximum and minimum create the upper and lower limits that the company or companies to which this policy applies is willing to hold to this asset type. The minimum and maximum can be set as fixed values or as a percentage of financial assets of the company. For example, this particular company requires $100,000 cash on hand and $300,000 in cash equivalent. The associated asset policy has a maximum percent of 20% for category cash. The amount fields will ensure no category is under nor exceeds a certain amount. The percent fields will ensure no category is under nor exceeds a certain percentage of the company's total assets. In this example, the cash equivalent category is marked prescriptive, which indicates there is no tolerance in amount variation. The other three categories are not prescriptive and thus have a higher tolerance. Tolerance is there to take the noise or clutter out of daily reporting. For example, if a company has a tolerance of no more than $100,000 in government-backed security, with a maximum tolerance of 5%, the exception report will not show a policy violation until $105,000 is reached. It is possible to assign the same risk policy to multiple companies. Reserve accounts in X3 Construction are designed to help track committed funds and any policies around types of funds that satisfy the reserve requirements. Examples of reserve accounts include capital improvement funds, loan reserves, and bond reserves. In order to maintain reserve requirements, users need to create specific reserve accounts with related account details and criteria, as well as append single or multiple reserve policy types. Reserve accounts in X3 Construction do not require funds to be held separately from other funds in the company. Limit the types of assets that count toward the reserves. Restrict the minimum and maximum amounts of types of assets that count toward the reserves. Provide transaction tracking for reserve accounts with value changes over time, such as capital improvement funds. Allow for restricted and unrestricted reserves. And allow reserve funds held in a separate account to be tied to the reserve account. It is important to remember, reserve accounts and financial covenants are not connected. A bank account tied directly to a reserve account will not factor into other reserve account values. Users may add multiple policies, but are limited to one per asset type. Reserve accounts, such as capital improvement funds, can have transactional history. Liability management within X3 Construction gives users the ability to track outstanding loans and lines of credit in order to track cash flow commitments, loan balances, and transactions. The Loan Terms screen allows users to capture the specific terms of a loan, as well as generate an amortization schedule. Amortization schedules can be imported into cash models. Users can also create financial covenants by completing the Financial Covenant table. For example, a quarterly profit and loss statement. Once the statement has been completed, X3 Construction will keep a detailed record of the report. Users can also attach documents via the Document Management System for the System of Record. Under the Transactions tab, users can keep track of payments, draws, and fees, as well as create unposted journal entries for the general ledger. The Companies tab shows data for multiple companies under a single loan. X3 Construction can track which company is responsible for what portion of the loan. A surety bond is put in place to ensure project completion within the terms of the contract. Legally, a surety bond is a three-party contract comprised of the surety, or guarantor, the principal, such as the contractor, and the obligé, the employer. X3 Construction allows for the tracking of surety bond requirements, expiration dates, and renewals. Here, we see when the surety's policy begins going into effect, i.e. the effective date and the expiration date of the surety. The surety's terms may be extended within the time span designated by the renewal date. Some surety bonds will require that money be held in reserves. Users can tie a reserve account to a surety bond and attach documents through the Document Management System.